Stop and ask yourself if you are sitting on a gold mine without even knowing it, because right now homeowners across the country have record amounts of equity, but most are accessing it the wrong way and losing money in the process. Welcome back to My Lender for Life, where today we are settling the debate between the HELOC and the cash-out refinance to see which one actually makes sense for your wallet in 2026. A cash-out refinance replaces your existing mortgage with a new, larger one, allowing you to pocket the difference in cash, which is great if you want a fixed rate on a large lump sum. However, it means resetting your loan term and potentially trading a low historic rate for a higher current market rate. On the flip side, a HELOC acts more like a credit card secured by your home, giving you a revolving credit line to draw from only when you need it, which offers incredible flexibility and often lower upfront costs, but usually comes with variable rates that can creep up over time. If you are looking to renovate your kitchen or pay off high-interest credit cards, you need to know exactly how these costs compare over 5, 10, and 30 years. So let's dive into the numbers so you can access your cash with total confidence.